All right, what is up, tycoons? What's up, traders? Super excited for today's video. Going to give you guys an update on Bitcoin and Ethereum, the two big ones. All right, when it comes to the crypto market, this is Bitcoin over here on the left. We have Ethereum here to the right. We can see that it's been hitting our bullish price targets on both Ethereum and Bitcoin, respecting them very well. So I'm going to go over, some of the recent price action, some of the key levels that I'm watching, as well as some of the algorithmic structure and trading channels that you guys need to pay attention to and start learning about. Okay, so make sure to smash the like button, subscribe to the channel if you guys are new, so that way you don't miss any of the updates and things like that. Now, of course, with that being said, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. I'm not a registered financial advisor or broker. Trading in stocks, bonds, commodities, cryptos involves a significant risk of loss and is not suitable for all investors. So make sure to read through the full disclosure. We'll go ahead and hop into the chart now, and we're going to start off here on Bitcoin. Okay, and we had our major support levels here, and I've got some more in case we break our our bullish channels here, and we get a move to the downside. We have a former supply zone, okay, that I was watching a lot, right around the 24 to 2500 region. And you can see we had some resistance here, as well as previously in the past, it was also resistance. And we were able to break through this supply zone and actually push up into our bullish price targets, right? We hit our first bullish price target of 27,173, and we've done a really good job of holding that as support. And really, we've only seen wicks below. And if you notice, we have these purple channels here, right? And so what these are is these are systematic algos, and these are algorithmic buying, right? So you don't necessarily want to short these channels, especially when you're trading inside of these channels. Rather, once you break the channels, then you can try to catch any short moves, but you need to be cautious of these right here, which are liquidity grabs, right? And so ultimately, we're looking for a larger three-wave structure to take us up to our bullish price targets. If you missed the last videos, right, we're not going over all of the past data, but there were a lot of things leading into this where before we even came up to these price targets, or rather when we were at these price targets, I was already looking at 20,372 and 19,217 as some major support levels. All right, those are our major Fibonacci retracement levels, and you can see we held that 20,372 level very, very well, and ultimately got where our wave 3 on the push up into our second bullish price target here of 29,251. That's exactly where we topped out here on this wick. All right, and we've been following the systematic buying, right? Now, there were a couple things leading me into thinking that we were going to have a sell-off once we were up in this region around 25,000. And the reason being was we had some bearish divergence, right? So if you notice, we have these highs and these lower highs here on our relative strength index, or RSI, while the price of the token is actually going up, making these higher highs, right? So the token's clearly in an uptrend, but we're losing relative strength, creating lower highs. This is a term known as bearish divergence. You combine that with the fact that we're in a supply zone. All right, and we're putting a top in here now at the top of our systematic algo trading zone, and we end up getting a move down, right? We break through this algorithmic channel, and this is a really good example of a liquidity grab, right? So market makers, whales, institutions, algos, a lot of times, they want to make this move to the upside, but the liquidity might not be there, right? To put in these big whale orders, essentially, right? So what happens is you can see these liquidity grabs where you break the systematic trading channels, to break the algorithmic trading channels, really just to ultimately grab that liquidity, and they don't stay there for very long and ultimately make the move that you guys were looking for, right? So, a lot of people may have gotten stopped out whenever we break these channels, all right? You start seeing some algorithmic selling once you break your range and break the structure. All right, but after breaking that structure, all right, you see we get a very strong push up, and we initially break through that bearish divergence trend line that caused the drop, and we see a break, retest, and then we push back up higher. So very clean, very textbook. When it comes to Bitcoin, really since the year has started, it's been following the technicals very, very well. You can see the top of this trading range has now become the bottom of this range, and we have a new bullish structure that we're in right now. So, we've tapped the top a couple times. All right, we could tap the top again here, right around 29, 25, is going to be that area on Bitcoin. But ultimately, we're going to look, and if we do break our structure here, our bullish structure that we have 27,173 is now going to be a major support level. And if we break below there, okay, 25,527, 24,384, and 23,241, these are going to be large areas of liquidity, right? And these are going to be your major Fibonacci retracement levels after our new swing low. We've got the move up. And if we do get some type of a pullback and break this structure here, these are all going to be healthy retracement territory to ultimately continue the trend. That's why I like to use the fibs, is because it's mathematically formulated. And you use these because nothing moves in a straight line down or in a straight line up. Rather, you would see a move up, retracement, continuation higher, or a move down, retracement, continuation lower. So you can spot the trend continuation really well by using the fibs. As you see, we had the move up, retrace, trend continuation. You can also spot reversals, right? So if we move up, retrace, consolidate, and break through these levels, right, that's going to be a downside reversal. So if we break below 23,241 and we actually flip this to a major area of resistance from support, okay, then that's when we have the chance of coming back and retesting some of our previous lows around the 19,000 region, potentially even lower if we break below there. But ultimately 23,241 is kind of going to be that line in the sand for me, and really see, you know, what Bitcoin is going to do there. If it retests it as resistance and is not able to get above, again, most likely we're going to be looking for a retest of some previous lows. But for right now, we're still in our bullish structure, still trading in the algorithmic trading zone. ETH looks pretty similar, okay? If we take a look here, right, we go over some of the same principles, all right? You know, we have the bearish divergence where we're creating these higher highs, right? And we're doing that as we're entering into this major supply zone where there's a lot of sell orders, okay? And we see that, you know, we get that bearish divergence with the higher highs. Meanwhile, the RSI is making a high, lower high, lower high. All right. And ultimately, you know, we see the pushback, right? And we head back down just like Bitcoin to our 50% retracement level, major area of support. Okay. And we get the 1, 2, 3 up. Now, Bitcoin or ETH has hit our 1835 bullish price target. Okay. But it hasn't been able to really to get close to that second bullish price target here of 1962. We do have a little bit of a range right here that we're trading in right now. These are our channels, right? These are algorithmic buying channels supporting it at the moment. We're trading in the upper range of this, but ultimately we're really battling that 1835 level. We'll have to flip that to some type of support if we want to hit our 1962 price target. And keep in mind of the liquidity grabs, guys, right? Over here, you know, we have our algorithmic channels, right? We have our buying structure, and then we see we break below, right? We get a liquidity grab right at our 38.2% retracement level, the 38.2, 50%, and 61.8%. These are the three most common and well-respected retracement levels. There are others, but these are the ones that I like to focus on in particular to really help declutter the screen and not have too many, right? And then you see we actually put in the selling structure here, right? And we have these selling ranges, these selling formations, okay? Algorithmic selling pushing us down, right? And then we actually get a liquidity grab here, very similar to Bitcoin, where we break the structure, but then we ultimately break out to the upside. And now we're trading back in a bullish structure. We have this, you know, channels right here that we're trading in right now. So we're going to look and see, you know, what's really going to happen next from here, okay? Where are we going to go next? Very similar to Bitcoin, right? We did get a breakout and retest, but it was a little bit more dramatic here in Ethereum. Ethereum broke its bearish divergence trend line a little bit earlier and then came back and got a very clean retest off of this prior resistance trend line and had a strong push upwards. So when you can start to recognize some of these things, right? When you start to recognize that, hey, we have this selling structure right here. We see we have this big nuke of a candle right here, but we're approaching our major support level here at the 50% retracement. We're getting a bounce off of the Fibonacci retracement. You could start to, you know, use some of this knowledge and say, hey, maybe this is a liquidity grab for the actual next push up. Remember, we were looking for that three-wave structure to the upside, and all of this is healthy retracement territory. So, you know, hopefully you guys learned something new. Hopefully you enjoyed this video. If you did, make sure to smash the like button, subscribe to this channel if you guys are new. That way you guys don't miss any of the updates. You know, I'm covering the crypto market, stock market, many things as well. So, you know, even if you are interested in things other than necessarily cryptocurrency, there's a lot on this channel that you guys can learn from. Make sure to check out the free trading course playlist. All right. It's a free playlist I put together, really starting from A to Z to, help you guys out with some of the beginner things you want to start off with, such as candlestick patterns, how to draw support and resistance, what are supply and demand zones, how to draw those. And then we dive in a little bit further from there and start going into the fibs. We start going into, using some simple moving averages, using VWAP, different things like that. All right. So that's it. I'm out.